Hello everyone, welcome to the Ichimoku Charts.com daily analysis for gold for Tuesday, June 25th, 2013. Well, a continuation of the trend to the downside today, a candle that's made a lower high and a lower low. And that's been achieved on a spinning top type candle, so the prior trend remains in force. We haven't seen a change of trend yet. Spinning top type candles are candles of indecision. We have a small body, and that denotes that neither side is making any substantial net bullish nor bearish progress, and does say something about the lack of momentum from the sellers, so raises some doubt about the market trading in either direction. But also we see price rejection on the upside and on the bottom, and that's in line with this market being bound between the solid resistance overhead at 1300 and the solid support close by at 1266. So a very indecisive candle. So we will be looking for the market to trade either way, and we are forming some sort of a small congestion area here. It's not a terribly well defined one, and we can perhaps see some sort of a pattern here. And if we draw the boundaries of that pattern, I am being quite liberal with drawing this. It isn't really quite a well-defined pattern, and is probably a little bit small, and we don't have any well-defined peaks or troughs at the moment. But we are seeing the market congest, and the trading ranges contract dramatically from what we have seen. And it does suggest that there is some sort of a pennant pattern being formed here, and we will be looking for a potential breakout to the downside. So pennants tend to be very quick forming, and that's what we're seeing here at the moment. So we'll be looking for a breakout in either direction very quickly, and that could come for today's trading or tomorrow's trading. And they tend to be continuation patterns, so in the direction of the prior trend leading into them, which in this case was down. They can also be reversal patterns, so look for a potential breakout above the top barrier, and the targets for measurement are quite different. The target, if it is a continuation pattern, and I've drawn the target in here as the prior trend leading into the pattern, projected out from the breakout. We don't have that breakout yet, so let's not preempt the market, but if that does occur, we could potentially have a target down around the 1150 area. If we have a breakout to the upside, the target would probably be back up around the 1328 level, quite small, and we will face quite strong resistance up around that level. But there is a possibility of this being a very small quick forming pattern with a potential breakout to the downside. Now, in line with the market being trading down below the Ichimoku indicators in all time frames, it is more likely that the target would be to the a breakout to the downside. So let's be ready for that. Now, in terms of the Fibonacci extension, we're still in this first time frame downtrend. We have been for quite some time. We've traded substantially through the 161.8% level. The next target here is the 261.8% level. But with the indecision in this market at the moment, there is some doubt about the market reaching that target. We could see the change of trend very soon because of this spinning top type candle. But the Fibonacci retracement here, which is now in an expansive mode, gives us a stronger likelihood of the price rejection being here to the upside, with the market acting in again in an indecisive manner around the 423.6% level. It does suggest that we won't see this breakout to the downside. It is likely here that it would be to the upside. The 423.6% level is quite extreme, and it's rare for markets to trade down through those levels. If we do see the breakout to the downside, however, our target here is around the 1189 level. That is the 685.4% level. So if we see the breakout below that pattern, our target for the pattern is below that 1189 level, and certainly doesn't give us a lot of confidence in the target being met if the breakout is to the downside. This market is more likely to hold up before it reaches down to that level, and the 685.4% is a target based on this Fibonacci technique. Now, in terms of Ichimoku, obviously a bearish market in all three time frames. The market's trading below the cloud, below the Kijun-sen and the Tenkan-sen, and the checkout span is below the corresponding price action. So we're negative in all three time frames, and all of this is suggesting that if we do see that breakout to the in either direction from this small congestion area, it will more likely be to the downside. The only limiting factor here is look at all of this support all the way down through to the area where the target may be. We have 1, 2, 3, 4, 5, 6, 7, 8 possible areas of support, and this market is not going to move down there terribly easily. breakout to the upside, a lot of doubt about that. The 1300 round number is very close by and has in the recent past been a solid barrier to this market moving higher. We also have strong resistance extending up to around the 1309 level. Interestingly, the Kijun-sen is pointing flat, and price action tends to be attracted back towards a flat Kijun-sen. But if we look at this flat Kijun-sen and how the market's behaved, we haven't seen the market rally. We had one attempt to rally, and then the market's been bounded by this 1300 level. This does suggest that the failure of the buyers to be strong enough to trade up towards that flat Kijun-sen says something about the strength of the sellers in this market, and does suggest that the breakout here will be to the downside and we will see the market trading lower.